Hi, I'm Gordon Coyle, and today we're going to talk about the executive officer exclusion in the New York workers' compensation insurance policy. Okay, that's a little bit of a long title, but this is really important. In New York, and in a lot of other states, employers have the option to exclude themselves from workers' comp. Typically, if your company is a corporation, executive officers can opt out of comp by signing an exclusion form and submitting that to your insurance company or to the Workers' Compensation Board. If your company is formed as an LLC, sole proprietorship, or partnership, members, partners, and owners are automatically excluded from workers' comp coverage, but can elect to opt back into coverage by submitting an inclusion form to your insurance company. Now, what we often see are owners of construction or contracting firms opting out of workers' comp. The thinking is that the business owner is typically not doing a lot of high-risk work and they only supervise or give estimates, but they get charged the higher governing rate for workers' comp, which can be really expensive. On top of that, many contractors have said to me, hey, I've got good health insurance and I've got long-term disability insurance, so why do I need workers' comp? The answer is that a group health policy is almost always going to have wording that excludes coverage for work-related injuries, or for work-related injuries if you were eligible for workers' comp. And some policies go so far as saying that there is no coverage for injury or illness arising from the course of employment. That's a pretty ironclad exclusion. Now, some business owners may say to me, hey, I've put claims in to my group health insurer in the past, which were work-related, and I haven't had a problem. I get it, but there are two problems here. The first is that you're lying on a claim form, which will always ask, is this a work-related injury, right? In New York and a lot of other states, that's insurance fraud and could be prosecuted as a felony. The second problem is that if you have a work-related injury and not had a problem getting the claim paid, I bet it was a rather minor claim, probably under $10,000. The real problem is when someone has a major claim, and that's when your health insurance company is going to start to investigate the situation just to make sure it's legit, and that's where it's going to really, have an issue. And that's also where you're not going to have your bills paid. The bad news there is that you could be facing hundreds of thousands of dollars in unpaid medical costs. One other problem that we see every once in a while is when a business owner opts out of their workers' comp because their spouse has a great plan like a teacher's plan or a municipal workers' plan, and they're insured under that policy. Unfortunately, the same exclusion will apply, and you'll be left holding the bag, which could be jeopardizing your personal net worth. Now, let's take white-collar companies, where an owner may be classified as an executive officer, or outside sales, or even clerical. These are pretty low rates, and payroll is capped to a certain maximum for owners. It's in these situations that totally don't make any sense to me to exclude or opt out of workers' comp. Some executives have told me, hey, I have really great health insurance and disability income coverage. I don't need workers' comp. Besides, how would I be seriously injured on the job? Okay, again, two parts. First, it doesn't matter how great your benefits are under a group health plan, you're going to hit that exclusion for coverage for work-related injuries and not have any protection. Second, executives can be seriously injured on the job just like any other business, whether it's getting hit by an uninsured driver while going to the bank or taking a fall down a set of stairs at the office. Look, shit happens, and not having the right primary coverage can bankrupt even the savviest executive. Here's the bottom line. Like all sorts of insurance policies, one wrong move, one poorly structured policy can do some serious harm to your firm's enterprise value, and by extension, your net worth. That's why you need an expert advocate to watch for more than just the price you pay. Price is important, but taking shortcuts to reduce costs often lead to disastrous consequences. To make sure you and your net worth isn't at risk, give me a call or drop me an email and see if we might be a good fit for your company. Thanks.